Let's scroll down to see if we have any chart of account called capital account, right? Do we have any chart of accounts called capital account? Yep. So we have something very similar. It's called share capital. But I don't want us to use share capital because it's going to confuse us. So share capital means is the amount of money you raised for your business, right? From selling shares. And if we are to select share capital, you're just confusing QuickBooks because you will not be able to properly account for the number of shares that was sold. But this AZ Limited, let's say Favor is CEO of AZ Limited. Favor is making an investment in AZ Limited from his personal money. So it will be so wrong for us to categorize this capital under share capital. If it was if it was an organization that was incorporated into CAC or that is quoted on the Nigerian Stock Exchange, it means that by virtue of you being quoted on the Nigerian Stock Exchange, you must have raised some form of capital by selling shares. So that is why for this particular practical we are doing, we're not going to bring in share capital because literally this company is not quoted on the Nigerian Stock Exchange. We did not raise capital by selling share or by doing an initial public offer, right? So let's keep scrolling to know if we have any capital accounts. So there's no capital account. So what we do is just to create a capital account, and it's still the same way, right? So you just come here. So capital account, what category of asset does it fall under? What category in the financial statement does it fall under? So it falls under owner's equity. So it falls under owner's equity, and you can see. So they're asking, so what kind of owner equity is this? Is this equity in earnings of subsidiaries? Is this the opening balance equity? Is it the ordinary shares, partners equity? Let's keep scrolling. Retained earnings, treasury shares, share capital, and the likes. But this particular one is actually owner's equity. So what owner's equity means is like it is the contribution of the owner of the business to the business. I don't know if you understand. So you're starting a business, you're bringing your own personal money to start that business as a capital. So there are different ways of raising capital, right? For a business, you can either choose to raise capital by an initial public offer. You can choose to raise capital. We have venture capitalists that give startup funds and contribute money for the business to run. But sometimes some business owners decide to just raise capital with their own personal resources. So we're assuming that AZ Limited is trying to set up this business using his personal money. He's bringing in his personal money of 10 million naira into this business, right? So we just select owner's equity, and we can also leave the name as owner's equity, or you can change it. But I think owner's equity sounds more professional because this is what you're going to see on the face of your financial statement, right? So we'll just do um let's say capital used to start the business description. Capital used to start up the business. Yes. So they're asking you, is this a sub account? Blah blah blah. You say is it that you say no or yes, but most likely because it's owner's equity account, it's not going to be. It's not. There's nothing that you're not going to check it. Then we have balance. I want you to understand. When I was talking about Access Bank account, I was saying that there's no money in our Access Bank account. This is a relatively new business, but you have to understand that because owner's equity accounts cannot be empty. Let me break this down. We are saying that Favor AZ Limited started a business with 10 million naira, which was paid into the Access Bank account. What this simply means is that this account called owner's equity already has 10 million naira sitting in it. I don't know if you understand. So in accounts, we have debit and credit. And a capital account by default is a credit account. I don't know if I'm going deep, but an asset account, like let's say bank, cash, yes, bank cash, motor vehicle, they are all debit accounts. So whenever money is increasing in, let's say, a capital account, you credit it to indicate the increase in that capital account. But whenever money is also increasing in an asset account, you're going to what, debit it. I really hope you understand. So what I'm just trying to bring out is that you cannot leave here empty, because when you're about telling QuickBooks that you paid money from owner's equity to Access Bank, QuickBooks is asking you that, I don't get. Is if you are telling me that you paid money from owner's equity to Access Bank account, there should be money in your owner's equity. So that is why when you're creating a chart of account, even if it's not owner's equity, any chart of account you're creating in accounting, you need to at least, that's why the knowledge of debit and credit, you need to have it at the back of your palm, because it's still going to help you in even telling the software what to do, because you're the one telling the software what to do. Once you tell the software the wrong thing, just like garbage in and garbage out, the result or the output would be wrong, right? So that's why when people say, "Oh, accounting is going to go on extension," I'm like, you guys are joking, because look at somebody think he's wise and he's bringing up a software, but then we still need to think. We still need to use our brain to even properly design this software. So trust me, even as technology is advancing, there are new changes. The brain of an accountant that is up to date and that has upskilled will still be relevant. So let's just put in our figure. So we said that he's going to introduce 10 million naira worth of capital into the business. So let's say today is the day the business is starting, 24th of September 2023. 21st of September 2023. So we select it and we save and close. So now let's go and check for it. Or we can just search. Let's search owners. You can see our owner's equity. Look at the account we just created now. Owner's equity, we have 10 million naira there. So is this 10 million naira we want to move? I wish we understand. I really wish we understand. So we want to move this 10 million naira from this owner's equity account to our Access Bank account, because it cannot be sitting, we cannot be doing transaction from the owner's personal account, right? We need to move this money from the owner's equity account to the Access Bank account. So how do we do? I wish this can be very simple. I wish you can understand, but I want to believe that you're understanding. So how do we do that? So you can see under this plus sign you have here. Once you click on this plus sign, it tells you different thing. You say in case you want to make an invoice, you want to receive payment, you want to create a sales receipt, add customer, you want to do expense, check, bills, pay bills, a whole lot of things you can do here. Then for banking, if you want to anything banking here for your sales, if you want to see all your sales, you want to see all the list of your clients, all the list of your customers, you can come here. Then also the list of your products, you can come here. So all these things are just, once you open the dashboard, you would see, once you click on it, it will just bring out a report, automatically generating reports for you. So let's go to, we want to record that the business started with 10 million naira that was paid into the Access Bank account. So we're just going to click transfer. Simple. We have to transfer something from somewhere to another thing, right? So once we click on transfer, it takes us to, very simple. So now it takes us from, it's asking us, so let's start. Let's take it one after the other. So it's asking us, so you want to transfer funds. Where are you transferring these funds from? So you select where you're transferring it from. No, we want to transfer from owner's equity, right? Do you remember? We want to transfer from, so that it reflects in our Access Bank, because there is nothing in our Access Bank account, right? So we select owner's equity. You can see it has brought out that in owner's equity, you have 10 million naira, right? Then you now select where are you transferring the fund to? Access Bank. Our Access Bank was what? 0 naira. We did not put anything. How much are we transferring? Sometimes it's not every time you have to transfer the entire account, the entire amount, right? So let's say you're transferring but for this case, we're going to transfer the whole of the 10 million naira. Let's say we want to transfer 10 million naira. Yeah, so once I transfer 10 million naira and say this is the opening capital for the business as at what's today's date 24/09 blah 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 blah. Then this is attachment. So let's say there's a receipt, you went to the bank, you did the transfer, or there is an evidence just for future record keeping, or auditors are asking you, hey, how did you do this transfer? You can just pick up anything that looks like your attachment and add, but we don't have any attachments for now. Then we'll now click on save and close. So once we click on save and close, what you've told Excel, what you've told QuickBooks is that there is no more money in my accounting owner's equity. The money has moved from what? Access Bank, from owner's equity to Access Bank. So now we now have money towards carry on the business. Do we understand so far? Please. Only 12 people on this call. We have to call it a night. But do we understand? All right. So let's just do two more entries and I'll show you how the financial statement look like. And we'll go to bed. So now we have 10 million naira in our Access Bank account. Before, we did not have any money there. But we have told QuickBooks, our software, as accountants are smart and tech savvy. Okay, QuickBooks, I want you to put this money in Access Bank. No mago, no nothing. You gave it direction and it's doing according to your bidding. So now we have 10 million naira in our Access Bank. Let's now say, okay, because this is a new business, AZ Limited, we need, I think, let's say, we assume that they are producing phone, right? Is that what we assumed? Let's just assume that they are producing since it's a manufacturing company. So it will need to get phone to sell or get the material needed to produce the phone, right? So let's say he end up, since he have 10 million naira, he end up, what will I do now? Okay, let's say he wants to get a building, he wants to buy a store or a house for where his he'll be using to sell or store his product. Let's start from that one. And that warehouse costs like 2 million naira. And you are the accountant and they say, okay, Linda, so we want to purchase a motor vehicle for the business. What's 2 million naira? We need motor vehicle to be moving around, trying to go to the market and everything. Can you help us enter this transaction into an accounting software? It's not hard. The thing you're asking, okay, if you want me to enter a transaction saying that we bought motor vehicle worth 2 million naira, where is the money coming from? Where is the money entering? Do you get? So you know that money is leaving Access Bank and money is what entering into motor vehicles. So there are different ways we can do it. Is either we are doing let me not do journal entry. Is either you are doing a transfer, or you're doing a bank deposit, or you're even doing an expense, right? Because it is an expense. So let's say we want to show QuickBooks that we have moved 2 million naira, we have used 2 million naira to purchase a motor vehicle. So you come and select expense. Let's just check. Ooh, 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 ooh. Okay, sorry guys. So now, can you people still see my screen? Let me just go back. So we want to record that we bought motor vehicles and we did not just buy it from, we bought it using the money in the Access Bank account. So what we're going to do is to we can either go through the route of creating like an expense, right? Or maybe paying with check or even doing a transfer. But a transfer will not really show that you bought motor vehicle, right? So for you to do that, you can just come to expense, select expense. So it's asking you, oh, who did you pay? So, okay, this is just asking, oh, what is the name of the vendor? Where did you buy this motor vehicle from? So you can say, oh, I bought from, let's say the name of the organization you bought the motor vehicle is, company name is, let's say, why is this thing slow? So let's say the company name you bought the motor vehicle is, what's the name of this motor vehicle? What could I use? GAC Motors, GAC Motors, and GAC, because you need to put on all this information so that QuickBooks can recognize it. So you just put in the information, email, phone number, blah blah blah, and you click on save. So you select that, oh, GAC Motor is the account receiving it, is where you bought the motor vehicle from. You now select what, do we even have motor vehicle? You can see our if you notice, our chart of account don't even have motor vehicle. So we'll select and create a new chart of account and name it motor vehicle. No, 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 no. So this payment account is actually where did you pay the money from, right? You know you're making an expense, and if you're making an expense, it means that money is leaving somewhere. After this, I think we have to call it a night, because let's check how many persons are on the call. Just 11 persons. But let's go back because it's late already. So you have to select where the money is coming from. You're paying GAC Motors, you're paying it from your Access Bank account. This is when you're paying it. Payment method, are you paying with direct debit, that is transfer? Are you paying with cash? But since you selected the bank, most likely is most likely going to be a direct debit transfer or a check transfer. So let's say it's a direct debit transfer. So if there is a reference number, you just put in the reference number, and then at this point you now select the category. So this is when you select what you're paying for. If there is no motor, we may have to go and create a motor vehicle account. So let's go back. Let's check if we have motor vehicle here. Wait, I'm coming. Oh. So if you can see, like now going through all these things. Okay, so let's categorize motor vehicle as property, plant and equipment. No, 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 we can't categorize it as that. No, we need to look for the exact accounting class it falls under. Uncategorized assets. No, 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 no. So if you notice, this is why you in fact the first thing you have to do is you just make sure you create all your charts of account, because as I scroll down now, I'm not seeing anything that looks like motor vehicle. So what it means is that we have to create an account called motor vehicle. So we just click on add new, and we call it fixed asset, and you can call it, see it here. So there is vehicles. You can now call it motor vehicle. If you can even be specific, truck. Then track. So this place is that, assets. If you're an accountant, you know that assets like depreciates in value. Do you understand? So asset depreciates in value, and instead of, when we're doing depreciation, we have to start calculating, oh, straight line method, reducing balance method, blah blah blah. With accounting software, you don't have to stress yourself. Once you just click track depreciation, right? What it does for you, it just asks you the original cost when you bought it, the date when you bought it, what your depreciation rate is. Is your depreciation rate 5%? Is it 10%? Is it 30%? Once you just do it until the asset um until the asset exhausts its useful years, its useful life, it would help you keep tracking depreciation. So for now, let's just assume we're not tracking depreciation because we are just buying the asset. We'll click on save and close. So you can see it has come here. Then you can just give a description. What are you paying for? Blah blah blah. I'm paying for this, I'm paying for that. Write it. Payment for what are we going to pay for? Payment for trucks to be used in for transportation, goods and services, for transportation of goods and Yeah, of goods. How much are we buying this truck? So let's say we said that we're going to buy the truck for 2 million naira. So 2 million naira. So yep. So if we're still going to buy anything on this day, you can as well include it here. But we're sticking to just 2 million naira. Then that's it. If you have any attachment, you can add the attachment. If there's something you want to write, please note that this payment has been made. Or anything you want to write, just put it here. Then click on save and close. So you can see, have you seen that our access bank account reduced by 2 million? It means that it's no longer 10 million naira, it's now 2 million. Then you can see money has entered into our trucks account. Are you seeing how simple it is? Let me just show you what the report will look like based on this little thing we've done. So QuickBooks, you have access to so many reports. Like, you don't have to stress yourself saying, oh, so I want to know how we performing. You have access to a lot of reports. Look at this one. So you have access to the audit log, you have access to balance sheet details, balance sheet summary, business snapshot, profit and loss. So many reports. So let's say I just want to, based on this little transaction we've done, I want to know what our financial position is as at today, right? So I'll just go and click on balance sheet details, and you can see in details. I don't know, can we still see the screen? Can we still see the screen? Just type, please. Can you see my screen? Okay. So it's in details, it just breaks everything down for you. So you don't have to bother yourself. Ah, my account is not balanced. How? It's not possible now when you are using QuickBooks. So automatically it just tells you, oh, this is what has happened. This is your balance. Let me go to another report that you might find interesting. Let me go to another report. So let's say we want to see our cash flow statement. Only accountants are really understand this, because if you're not an accountant, you may not really understand this. So let's say you want to see our cash flow statement of cash flow. So you can see no money has we've not had any income for that period. So you can see for our cash flows from operating activity is zero, nothing has come. Cash flow from investing activity, we used 2 million naira to buy trucks. Our balance, cash and cash equivalent at the end of the year, 2 million naira. So it's just so interesting. It's just so interesting. So if this was like a buying and selling transaction, as opposed to just doing expense, you can just come here. Maybe the person, you want to buy goods, right? You create your product. So there's a place you can create your product over here. You just come create products, because I'll be wrapping up soon. Add your product. So let's say you are as AZ Limited now. AZ Limited wants to buy phone to sell. You come here, select, oh, is this a product to buy or sell? And that's why QuickBooks is nice, because even if you are a service business, let's say you do graphics design or you do website design, you can also use QuickBooks to actually enter your transaction, and it will be good, because if somebody wants to give you a grant, or you're applying for a grant, let's say Tony Lumelu grant, and they say, oh, bring your financial statement for the past 3 years, and you don't have financial statement, do you know what that means? I'm sure they will not give you, even if you are trying to like get a loan from the bank, they will require all these things from you. So let's say, oh, this AZ Limited, he wants to buy a product to sell, or he wants to manufacture a product to sell. You can just come here, select inventory, put in the name. So let's say this is iPhone 18. I know there's no iPhone 18. So stock keeping units, whatever it's stock keeping units is like, sometimes when you go to the supermarket, there is this number, one code like this that they used to have attached to it. So for people that have stock keeping units, you can just put in the number. If it's something you want to categorize, you can just put in the category. Then for this particular product, since we're just buying it for the first time, there is nothing you don't have any of them in your warehouse. So you can always put zero here. Then when did you buy it? So this quantity in hand, as at what date? Put the right date. At what point do you want QuickBooks to alert you to purchase more. So, and that's the good thing about automation, because once you're constantly using your software to record sales, record expense, it monitors what happens in your store, right? So we can tell you that based on what you've put into the software, or you already have only have two pieces of iPhone 18 in your store, you need to reorder. So this reorder point is simply, oh, at what point do you want us to remind you to get more iPhone 18? Maybe say you can say when it's two, when it's three, when it's one, when it's zero. Let's say when it's remaining five, you want them you want them to remind you. Then under what class of assets is this? So you can call this inventory assets or inventory, whichever is fine. So it's asking you, so what is the sales price? You know you're buying to sell. So let's say the sales price is, how much is iPhone 18? My own iPhone 18 is very cheap. So let's say it's 100,000 and we want it to enter into the sale of product account. Then for purchasing information, so this is how much I want to sell it. For purchasing information, let's say it costs about 85,000. Then this is where I want it to be. I want it to be in the cost of sales. Then you can also put the supplier. So let's say you bought it from somebody, you can just add new and save and close. So this is one of the products. In fact, it has even told you that this product is low in stock. It will show you, and this one is out of stock because we don't have any quantity at hand. So we've created iPhone 18. So let's now assume that, oh, AZ Limited went to buy iPhone 18. How do we record it? So if AZ Limited is going to buy iPhone 18, what he has to do. So he can either go through bill. So bill is simply when you buy and you have not made payment. For invoice, when you sell and you have not received money, the source document or the supporting documents you would issue to your customer is an invoice. But for purchases, when you buy and you have not paid for it, first of all, your vendor will send you create a bill, right? In the vendors To the vendor it is an invoice, but you that is the receiver, it is a bill. So if we're going to buy this iPhone 18, either we're paying for it outrightly. So expense is usually used when you want to pay for a transaction or you want to record a transaction that you have paid for. When you want to record a transaction that you have paid for, that is when you use the expense, this part of the QuickBooks. But in a situation whereby you paid for something, you bought something, it has been delivered to you, and you haven't gotten it yet, you have to record it because it means that you are owing somebody, right? Let me check. Are we still here? How many people are here? 12, 11. So are we following? Oh, we can reschedule. This is almost 10. This is almost 10 p.m., guys. I think after this one, the problem is that every time I say after this one, well, I don't know, I just keep going on and on and on. Maybe I'm enjoying the ball. I don't know why I can't just stop, but I think I have to stop. It's late. I agree with you, Blessing. I really agree with you, Blessing. I really agree. So let's just do this one quickly. So after this one, trust me, I'm going to call up the call. So back to what I was saying, you can either use bill or expense. So if we are using bill, so we're saying that, oh, we bought this from this supplier. Who did we buy iPhone 18 from? Let's say Blessing Limited. It's late, so it's really late. So sorry. I'm so sorry. So sorry. So we bought from Blessing Limited. Sometimes suppliers will give you, oh, pay within 30 days, pay within 60 days, pay within 15 days. If there's a bill number, you put your bill number. If there's a tag, you put your tag. For here, you just select what you are buying. So you select the category, or we can even come here to select the item. So we are buying iPhone 18. You can see iPhone 18 here. How many iPhone 18 are we buying? We're buying 20, right? How much is it? 85,000 naira. Total amount is 1.7 million. So you save and close. So it says bill has been recorded. So by the time you go to your report and you go to your unbilled charges, Let's go to let's still go to balance sheet. You'll see that it would reflect. You can see account payables. Account payables is simply your creditor. So it will reflect here as you are still owing somebody. By the time you even double click on it, it will give you, it will take you to where you can see the transaction that made up that 1.7 million naira. So you can see bill to Blessing Limited. Let me close this. Bill to Blessing Limited inventory 1.7 million naira. So at this point, I really hope you've been able to get value. We've tried, we really tried, and I would really go what Blessing said. Let's reschedule. But just quickly, I hope you've learned something. Just tell me in the chat box. Oh, I've learned at least I now I've seen what the software is like, and I've seen that it's not hard. It's something I can even do by myself. All right, thank you guys. Thank you so much for your time. It's been over how many hours? So sorry guys. Thank you so much. So at this point we'll call it a night. I'll drop an assignment on the group. So I'll just give you a list of questions, like a list of financial transactions. I want you to go and try it out. Go to QuickBooks Online, create your own account for your own business, right? Books Online, go and create your own accounting software and try. And even if you enter rubbish, because I would have done this for my own end, so I already know what your financial statement should be like. Send it to me, send your balance sheet to me so that I can compare. Because when you play around with this thing, you discover that account software is beans. The next thing you should be looking out for, you should be learning how to do valuation, how to do how to do how to create financial models. So my name is Favour Anidebe, and you can connect with me on LinkedIn. That's my name. All right. So thank you guys, and it's been a good time. Thank you for joining the boot camp, and I really look forward to connecting with you all. You can chat me up on WhatsApp. I'll be available to take all of your questions. Thank you, Blessing. Thank you, Princess. Thank you, Uzoma Precious, Naji Emmanuel, Ebube Chuku. Who else do we have here? Uh, Vincent. Cool. Oh my God. Thanks, Sharp Code. God bless you all. So good night, everyone. Good night. Good night. Then please fill the survey form more. Help us, and you'll get the recordings. Yep. Bye, guys. Bye.